Alrighty, I would like to welcome everyone out today to the Hurley Investments midweek commentary. Glad to have you guys with me. I found a quote that I think really hits it hits home to where the people I've talked to this year, unbelievable. I can't believe where people are at. Don't let fear of failure discourage you. Don't let the voice of critics paralyze you, whether that voice comes from the outside or from the inside. And that's Dieter F. Uchtdorf. I want to go over that quote just for a minute here. I'm shocked at what people have done year to date. What do you think I've seen? I'm gonna go through four people here in entirety, but out of curiosity, what do you think that I've seen that shocks me? Rick, nice to have you on board. And Ida, you're here. Maud, nice to have you here, Maud. Selling on the low on February. Bingo. I'm shocked. There are four things. Number one, selling out in February. Good thing I'm such a great speller, huh? Selling out in February for more than a year-to-date 10% loss. And I'm just going to put number two in there. Still haven't been fully vested in the market. Little shocking. And you know what, I should put it this way, haven't put 10% of their portfolio back into the market. Rick, nice to have you here. Glad to be back. Let's just say I'm glad to be back from being away. All right, number three, shocking. Unbelievably shocking. Lost 50% of their seven-figure portfolio spread trading without ever adjusting. So literally, where I'm going to go at with this, and you hear me say it all the time, I say over and over, trading is a process. Don't just place a trade and see, and I should say, wait to see if it works. That's stupid. I can now, in all honesty, that 50% of a little over $1 million portfolio, it actually started back last September. So it wasn't year to date, but that was back from last September. And no hope. No hope. I just... I don't even know what to say. I don't even know what to say. And then he comes and he says, you know, I think I need your services, and I want you to make it back in a year. And I just had to laugh and say, not going to happen. Not going to happen. Not going to waste my time. Not going to do it. That's ridiculous. Number four, and this is where I think we all run into just a little something that I think is important for all of us to understand. Number 4, lost hope in the process and went to asset allocation funds. I hope that this group understands when you're spread trading or when you're primarily collar trading, your goal is not to make up every single penny on the way down. It doesn't work that way. If you're setting it up so you're going to make up every single penny on the way down, you haven't given yourself enough upside potential. Now, I know Jeffrey does things a little bit different, but I'm just going to, in general, make that comment. If you're looking to make every penny on the way down, you're not going to be able to make the profits you should on the way up. I'm shocked. I'll be the first one to tell you, I'm shocked we're to break even in our markets. But with that said, I guess it's one of the new normals that we haven't seen yet, would be the best way that I could put it. I really would have expected our big correction, our big pullback. So out of curiosity, if I'm shocked, and I've got 20 plus years in the market, someone give me a reason why. Why did we come back so much? Why do you guys think we are where we are with such a horrible start to the market? Short covering, that is a big part, Rick, of the bounce back up. But I don't think the market went short 10%. So I will give you, Rick, that that's a big part of it. But excuse me, but I'm not sure that the numbers don't add up for me that justify the short covering to pull us back to break even. So I think that's a part, but I'm not sure if I could say it's the majority of it or the reason. But I will, obviously short covering played a huge part in how things came back. Good comment. All the uncertainty, if you only can't get it, how's everyone else supposed to? Well, you know what, Dan? I'm sorry. For the life of me, I think the Fed has always been a day late and a dollar short. They're always a bit behind the curve, and that's because they are data dependent. But if you remember, about 3 weeks ago or 4 weeks ago, one of my comments I said as well, since Yellen didn't raise the rates, we're going to wander up. We're going to wander up. I think I said that what? Well, let's find out when I said that. I obviously said that back in March, which would have been March. So what, March 14th? Yep, March 14th. So I've got it posted out there somewhere. It basically just said, and I was gone to see, yeah, nope. What'd you say after? So the March, maybe it was March 16th. March 16th, I basically just made the comment, hey, we'll probably meander up. We also went up quite a bit since then in March, but no rate hike, so it's kind of the green light to go for broke, so to speak. Best market in an ugly, there you go, Mod. That's my belief. I believe our markets have gone up because we're the best house on a really ugly world economy. I made the comment, grandma yelling, haven't raised rates, a form of QE. I agree. But I think, and I'm not 100% positive, I think that we are still the best house in a really, really ugly global neighborhood. And, so be it. So be it. We'll take it for what it's worth. And it's not worth a whole lot. It really is not worth a whole lot. I get a couple comments or emails that come through in the morning. It's kind of funny because about a week ago, what is that group? That conservative investing firm, the ones where I showed you they were, all in cash. So they jumped in last week, which means basically they're down for the year and they missed all of the down in January and they missed all of the back up in March. Couldn't call a bottom. And I just kind of chuckled that their stupid computer program and there went from no cash to being fully invested more or less at the top. Not saying we can't go higher, but how would I put this? I've given up on trying to time the market. I think it's really hard to say, hey, we're at a bottom, we're at a top, it's going to go higher, it's going to go lower. I take chances at levels of support that look like big levels of support. I'll be honest with you. I cash in profits and I buy more shares. It has been really, really hard with some of the positions I have where I've just left them. The last 2 or 3 weeks when options expired in March, I've been letting Ford run. I've been letting NVIDIA run with the covered call. Disney has nothing on it from about 91 all the way on up. Visa has a long out there in time covered call. I've sat through some things the last 3 weeks where I sat there and I probably was a little tired, maybe not thinking in my right mind, but thought, you know what? I can let it go a day. I can let it go a day. I've just been putting some of these comments here about the S&P 500. Yes, I think these guys are kind of idiots, but I like the information they give me. It's funny, their view of the S&P this morning was neutral. So they kind of blew it on that call, right? But they said about all the stuff that's going on. They give us support levels. What else can we do here? Game plan, I guess that's nothing. All right, so here we go. What's happening this week and why, guys? What's happening this week and why? Rick actually made the comment. Jamie Dimon, part of that team when he started the rally. Yes, when he said they're at the bottom, again, they're trying to save their butts because of the oil and the loans that they have on oil, saying, hey, we don't have many. Oil's bottomed. Rick Diamond definitely started out. Fed minutes were dovish, right? Fed minutes said, global concerns justify waiting to raise rates. I've bounced this comment back and forth with a couple individuals that the Fed definitely can't raise rates. And then they raised rates in December. Part of our drop down, our bounce back up, might be attributed to an overreaction of the Fed raising rates. I have no numbers to justify that. But anyone here think we're going to go back and retest the bottom, the lows again? Anyone think that we're going to lose 10%? Mod thinks so. Anyone else? I think so too. I think we went down too fast. I think we went up too fast. I'm going to say, just to be careful, that I want to be protected for this next earnings out through June or July if I can. I want to be looking at protecting myself for a sell in May and go away. And it'll probably be a sell in April because earnings are coming up. And even with the low numbers, banks are going to suck. Oil's going to suck. Technology doesn't seem to be doing particularly well. Retail sales might do a little bit better because we had the cold snap we had. But for crying out loud, it's 70 degrees today in Utah. I used to ski till my birthday on May 5th. And it's going to be 73 degrees tomorrow and 74 degrees on Friday. I'm not sure how well, if stores are hoping to sell their cold wintry stuff, how well they're going to do. What else is happening this week? Oops. Monday. Factory orders expected to be, well, you know what? I better hope I wrote that down right. It's 89 in Sacramento. Wow, Dan. 0.17. Yeah, I did not write it down right. But taking a quick peek, factory orders came in at a negative 1.7 versus an estimated negative 1.7. Not a good start, right? Yesterday, shocking. Trade balance came in at 47.1 versus an estimated 46.2. That's not what shocked me. The ISM services kicked off a bounce back. We couldn't hold it versus an estimated 54.0. Unbelievable. FOMC minutes let us know, hey, it's not just how quickly we're growing here in the U.S., but it's also how quickly everything is going on overseas. Abraham, maybe I'm wrong, but I don't see the Fed raising interest rates at least till the end of the year unless some relevant fact happens. That means that financial sector will stay at most where it's at and not higher. How do I see this? Yes. In fact, Abraham, I'm glad they went down from 4 interest rates this year. But it would not shock me to see a June, July interest rate hike and then a December again. I think they still need more ammunition to be able to fight global slowdown. And what really scares me and why I'm worried about this summer, a lot of those loans that the ECB lent out to the pigs, Portugal, Italy, Spain, Greece, loan payments are due this summer. Some of those loan payments are due this summer. I haven't paid attention to Europe like I should have. But I am going to tell you that it worries me that we could see those shocks and obviously they're going to roll the payments out. They're going to roll everything out to kick the can down the road. Yes, they're going to extend them. But the hoopla and the worry and blah, 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 blah is all going to come to pass. And I don't know. I thought it was ridiculous before. I think it's ridiculous now. Watch this summer be filled with more Europe and this and that, and volatility really kick up higher. What will the markets end this week? Not much is going on. Yellen speaks tomorrow. So I'm going to just say, continue higher, but not a lot higher. Take a peek at our charts. Unbelievable. Double bottom. And we're now bouncing off of we now bounced off of overbought. So double bottom. Double bottom. Let's go, Hurley. So double bottom, bullish, and now bouncing off overbought on the RSI. Telltale sign, 17,800. We get above that, we're going to go back and retest the 18,300s. Pretty amazing. It's a W-shaped return, right? Not a V-shaped. Here it is. W-shaped return. What I would like to see that'll give me some faith going through summer, that we won't have the sell in May and go away. What chart pattern do you think I'm looking for that's going to give me some faith? Cup and handle, there you go. Let's see some consolidation. Let's see things go sideways through April. If we can go sideways through April, some bad things happening in Europe. Again, we're the best block on the house. We'll see some things come back our way. Taking a quick look at the S&P 500. Ditto, right? Ditto the Dow Jones Industrial Average. Same thing. Mirrors it almost perfectly. But take a look at the NASDAQ. NASDAQ is a different pattern. And I really like the NASDAQ. I'm going to tell you it's bullish. But defending the 200-day simple moving average and still has room to run. If I was looking to start new positions, I would be looking at the NASDAQ. I really would pick and choose throughout the NASDAQ 100. Now, I'm going to pull in a little bit here. April actually I think will be a 2.5. April is usually, if I remember right, the second best month for the S&P 500. Not a whole lot going on, but I'm going to pull some of these out. And I got worried about Apple about 2 weeks ago. So I collared up Apple. I'm kind of cheating here because I've got a cost basis of Apple at only $84. And in all reality, it's probably closer to 50 when it's all said and done. So I put on the June 105 puts. Kind of sucks when Apple's trading closer to 111. Put the October 120 calls on. I'm ready for Apple to get called away from me. I am totally okay with having Apple losing half of my shares. If Abraham just said, since you want to know better Europe and cheer you up. Okay, thank you, Abraham. I just am trying to shift money from Apple over to Facebook. That's where I'm looking to find some value. And because of that, I can always roll those Octobers out to a January, open it up to maybe 135 again. But I'm okay with seeing Apple getting half of the 6,000 shares called away. That will work for me. And I'll be okay with that. So, will I change anything before earnings? No. As far as I'm concerned, Apple's already in play, and I'm good to go with Apple. Let's see if I can't make this a little bit bigger so you guys can see it. I know you're probably going, Kevin, we can't see it as well as you can. All right. Hopefully that's better for you guys. So Apple set for earnings, and I will let half the shares get called away. Alibaba. I'm just dabbling. A couple accounts have 500 shares. I will let Alibaba get called away. Baidu. June, 200 calls that were put on when it was closer to 155 a share. I'm down. If you take a quick peek, I had some long puts, kept those in place, but I'm down about $1.80, $1.90, $1.85, somewhere in there on my June calls. I'm going to add some one strike price out of the money, long puts, and I'm going to also roll those June calls out to probably a November, December, January 225 short call. I'm going to go buy some time. But a lot of people tell us, and again, I'm just trying to show a point, oh, Kevin, you and Jeffrey go so far out on those covered calls. For crying out loud, I put it on when it was $30, $31 lower than where it's at right now, and I'm down $2. I can live with that. Let's see what else I took a snapshot of for you guys. Just to kind of give you my idea, my thought process. Change, catch up. Kevin, have you really just been letting some things ride? Man, tons of Disney shares. Letting them ride, letting them come back. Disney will be a protective put strategy for earnings. Again, probably out to June. So Disney, protective put for earnings out to June. Ford. Protective put for earnings out to June. And you can see where I've already started. I just wanted to protect Ford here for the near time, but I'm hoping to make those puts down to $13. I did initiate a position for some new money. So I just wanted to make sure that, I don't know, I just wanted to make sure that I was ready to go and perfectly protected. Ida, I am decreasing Apple shares and I'm going to move it over to Facebook. And Alibaba, if I get out Alibaba, I will move Alibaba over to Baidu. Alibaba was a foolish, in fact, if I talk about Alibaba, I do have some institutional stuff. I'm pretty sure this Alibaba started out with about 700 shares, maybe 600 shares. And I had a client that wanted me to basically say, hey, it's going to be the next Baidu. I got sucked into it. I got two $500 share initial starting prices in some institutional stuff. But Alibaba has not proven itself. Got in too early, should have let it prove itself, should have tried to pick a bottom. It was kind of a stupid purchase. All right, Disney, Ford, Facebook. Facebook also scared me, so I protected Facebook 3 weeks ago, the same time I protected Apple. I'm already set. I can live with Facebook right now just the way it is. So, Facebook already set for earnings. And then come on, change. The last one thing I have here is Visa. Someone asked, what is a good price for Visa to get in? Any price is a good price. The best price is down at $70. But if you feel that Visa is going to grow, you can get in today on Visa. I'm still sitting on Visa, 24,000 shares-ish, so to speak. I've got January 82.50 calls that I'm going to roll up to an 85. And Visa, I will also protect it probably a 77.50. So I think it's going to go higher. It's kind of lagged the market, so to speak. At 77.50 and roll the long calls to the January 17.85 strike. And again, I'd be more than willing to, again, next down day on Visa, I jump into it. I think it has a broad spectrum, a lot of room to run. And guys, questions. Now that I'm back and I've missed you for 3 weeks, 4 weeks here, what questions do you have? I've got a lot of news I got to give you. So when I post this on the blog site, I'll have a lot of links to news that I've seen that I'll get out to you. I'll just email it to the group tonight. Will you stay without long put protection, or are you concerned about the same black swan event? And Abraham, I don't ever trade a black swan event. I'm not interested in trading for something that happens, 0.3% of the trading days. I'm not looking to trade for the 1/3 of 1%. I want to trade the other 99.6% of the time that markets are trading. So I'm not worried or concerned about a black swan event. If I'm wrong, I start adding long puts as stocks fall through levels of support. But right now, I'm using my long puts, and I'm going to go a little bit farther out in time. I'm going to go out to June or July. Normally I don't wait that long or go that long. But I guess my best answer is, Abraham, to a certain degree, I don't want to worry about summer. So if I don't want to worry about summer, one of the easiest things to do is just make sure you're protected. And that's what I'm looking to do. Maud, you said you could see 1800 about 1830. If it can breach the 17,800 level, taking a look at the chart, it ran up against it and it hit it, it bounced back down. If we can breach that 17,800 level, I think our market goes up 500 points from there, and we'll test the that 18,300 pretty quickly, meaning in a couple days. When it's going to start happening, it all depends if we can break that 17,800 mod. And the reason why I'm saying that is because that coincides more or less with where we started our drop the end of December, beginning of January. So we need to see the market get back to the highs of last year. Ida, Apple Pay and PayPal going to eat Visa and MasterCard's lunch? I don't think so. I was a little more bullish on PayPal, but they haven't so far. In fact, now Visa has Visa Europe, they have Visa China. Apple is working with Visa, so Visa didn't lose money from Apple, so to speak. If anything, they gained some money. I haven't seen PayPal into those ungodly billions and billions of numbers that you see of revenue from MasterCard or from Visa. So I would not say Apple Pay and PayPal are going to eat Visa and MasterCard's lunch. In fact, I think they're firmly entrenched. I think Visa, the reason why I chose Visa over MasterCard is they seem to be having they're doing more work on finding new business that I don't quite see from MasterCard. But I'll be honest with you, I haven't looked at MasterCard for a while. But that's why I'm sticking more with Visa. Abraham, I agree the impact can be devastating. That's why I ask you. Perfect. Abraham, did I answer your question then? Did I answer your question on the Black Swan events or how I'm trading right now? Perfect. Okay, let me take a quick peek. David Owens, nice to see you here today. James, James, you might be a new student. If I have not seen you in a Tuesday chat, welcome. Paul, you also look new to me. So Paul, if I have not welcomed you to the program, welcome to the program. Nice to have you two here. All right, guys. Hey, this is where you've got a registered investment advisor. What questions do you guys have on your own trades here? What questions do you have that can be a live trade that you'd like to say, hey, let's talk really quickly? One of my new trades that I just did for myself, just for fun, I placed a September 2028 VIX bull call for $1.70, and I placed it when the VIX was at 1343, 44. So I kind of think something's going to happen where the VIX will get pushed back up to 20, and for a 4.5 to 1 risk to reward ratio, almost 5 to 1, I thought, you know what? I'm going to take a shot. Here's a little bit of protection if things start to go haywire. Abraham, do I consider VIX level or dynamics in your trades? I do not. I am a rights and responsibilities trader. So obviously I'd like to be buying my insurance when the VIX is low, which is what I'm going to be doing here in the near future. But I've never based a trade or a caller trade off of the VIX. I'm just like, you know what? I've got these Visa shares, cost basis at 50.25. I'm going to make sure I protect that profit. And I think that true cost basis on Visa, for some of the people that have been with me 2 or 3 years, their cost basis is much closer to $22 than $50. But Abraham, I'm a rights and responsibilities trader, and I just use hey, it's trading at 78. I can protect it at 77.50 and throw a January 1785 long call or short call and be fine. Any other questions? Any trades, you guys? I understood Jeffrey gave me some credit for the S&P 500 trade. That'd be nice to see that get really profitable. Rick, for Visa, do you mean you roll the long calls? No. I've got short calls that are capping me, Rick, at 82.50. And obviously I've got a couple April there, but I may just let the April go. I'm not going to let the April go. I'm going to roll those up. But I'm looking basically to uncap Visa and put my Visa cap at 85 instead of 82.50. Visa's bounced off of 82 a couple different times. So I'm just looking to give myself a little upside on Visa. Maybe I'll go to an April 17. See if I can't make my roll for 0. But I want to increase or uncap Visa to the upside. Rick, I've used the May long. Yep, Rick, I'm going to make Visa out to June though. I kind of don't want to worry about it over the beginning of summer. But Rick, great position to be in. Long puts in May and 85 short calls. I think you'll be pleasantly surprised. Abraham, are you trading Bank of America? All right, so Abraham says, Kevin, I thought at the beginning of the year you said you were going to start trading some of these companies. Abraham, I've got 3,000 shares or so of Zion sprinkled amongst 4 accounts. I wanted to trade these, but I wanted to trade them on an interest rate hike. And when the Fed was going to raise the interest rate 4 times, they were supposed to be your sure bet for this year. Obviously, they haven't been. I'm in Zions. If I was going to be in something, I'd probably be more to Morgan Stanley or Bank of America. Goldman Sachs and JP Morgan are a little too rich, and they kind of have ranges that they don't seem to be breaking out of. So if I was going to get more into, like I said I was going to, the opportunity just didn't present itself. If I was going to get into more of the financials, it would be Bank of America and Zions Bank would be my first couple I'd look at, especially since Zions has fallen down to 23 from the 30s. Some great opportunity right there. Bank of America still trying to break out of that $17 range to catch to the mid-30s. Morgan Stanley and Citigroup are two that have perceived upside potential. Haven't studied them enough because we weren't getting interest rates and the movements that we thought we were going to in financials, but those are the ones I'd be looking at, and those are the ones I'd be spending my time with. Ida, are you a January 1785 Visa calls, long or short? Yes, I'm looking to move the current January 1782.50 calls. I am looking to roll those up to a January 1785, or maybe going out to a March or an April 85, if I can roll them for a break even or more credit. Abraham, are you sure that till 2018 we'd be buying a long call on the bank a good bet? I was going to say yes. I would think a long call out of 2018 on a bank would be a great bet. But we're supposed to have 4 interest rate hikes. We also haven't got our pullback. Let me take that back. We haven't really gotten our correction. Some stocks have gotten corrections, but we haven't had our market correction where we're down 20%. We did have 10% drop, but I believe that long call leaps on banks after 2018 would kind of be a no-brainer or a sure bet. Missing after 18, that is just a look. Yeah, well, again, if interest rates go up, all banks are keeping their fixed costs the same and they're making more money. So it should be an ATM machine. If you have an industry where all their fixed costs remain the same and they get to make more money on their rising interest rates, you should see some great movement. But we didn't have the correction here at the beginning of the year. We only had our pullback. So I'm kind of disappointed because I was looking to allocate money to banks, but I haven't yet. We haven't seen it. But I think if you're going long calls for leaps, you'll be in good shape overall. Don't just put all your money into it. Save some money so you can dollar cost average if we do have our correction. All right. Any other questions, guys? I'm still puzzled why you're rolling their long. Rick, they're short calls. They are short calls, and I'm just rolling them. I'm trying to uncap or give Visa more room to run. Mod, I would not be trading oil stocks at all. Too speculative, and I think oil might not rise to that $60, $75 a barrel till 2020 or beyond. Someone has a call out there from 2023. So I would be, because the way oil has been going, I would, thank you, Rick. I was, Rick, I don't know what we're talking about. Short calls, short calls, short calls. Mod, I wouldn't touch oil for quite a while. Rick, sorry to confuse you. It's kind of troublesome when I say one thing and I type something else in, huh? You're going, Kevin, come on, you dummy. All right, anything else, guys? If not, glad to be back. Glad to be here. Is ExxonMobil's dividend safe? I would not consider any oil dividend safe right now. Only because oil has taken out such great loans to buy up lands and so forth. I do not think any oil stock dividend is safe. And I think you have to dig into their fundamentals to see how much they have on loan that they could default on. Maud, Abraham, thanks. Glad to be back. Glad to hear from you. Look forward to seeing you guys next week. I'm going to add quite a bit of links. So what I will do for this group, I will just take your email from the registration, and I will email you out the notes because I've got a bazillion links of news I've been looking at. And I'm going to stick it all in there for you guys. Guys, have a wonderful evening. Appreciate your time. Look forward to seeing you again next week. Bye-bye.